Hi, I'm Tom Lydon, editor of ETF Trends here in Hollywood, Florida, at the Inside ETF Conference. I'm here with Jan van Eck, CEO of Eck Global, and also Market Vector ETFs. Great seeing you, Jan.
Good seeing you, Tom.
So, income. Let's talk about income for a while. There's the rising rate headwinds, but there are some alternative strategies that advisors can think about.
Right.
Give us some examples.
Well, I think when you look at 2016, it's a rocky year. Overall, low growth global environment, and probably the Fed's not going to do a whole lot in that environment. So the first thing I like for income is just safety, and that would be sort of muni bonds, some of our basic muni bond portfolios, even going a little bit high yield, because munis are effectively quasi-government debt, so you don't have a huge amount of credit risk. And as long as your Puerto Rico exposure is capped, it should be okay.
And even though we might see a couple rate hikes, not necessarily as affected by rate hikes as treasuries might be.
Yeah, I don't think, given the global slow growth environment, I don't think the yield curve moves that much this year, right?
Yeah.
So HYD, and then if you want to be a little bit more aggressive, XMPT, which invests in closed-end munis, so you get even longer duration or maturity, and they're trading at a discount.
And how
so
much is the discount now?
It's like 10% still.
Yeah.
Still.
Yeah.
It's bouncing around the bottom, so you still got a good buying opportunity there.
Great.
And then the next thing is, we look at the world as having gone through, the Fed tightening monetary policy about a year ago with QE3 rolling off.
Right.
So if you're willing to take a little bit of, high yield risk, we like our Fallen Angel ETF, ANGL.
Explain
is the ticker
the
symbol.
story behind that.
It's basically what we view as sort of a higher quality, a high yield fixed income ETF. So it's weighting to double Bs is higher than your typical high yield fund.
Yeah.
The way bonds get into it is you take an investment grade bond that's been downgraded, and then it gets added to this index.
Yeah.
So the original issue or the original company is investment grade, good, but ran into trouble.
Yeah.
And so whether that was the auto industry in a prior cycle or financials, now it's obviously energy, you actually scale into, as a contrarian play, the people that are having trouble now.
And you look at the names, and we'd all recognize a lot of those names as like pillar names within the financial services world, but as you mentioned, they ran into some tough times.
Yeah. It was the major auto companies, it was Sprint, in prior years, and now it's sort of the more solid energy names.
And decent yield for those names?
Yes, it's basically what you get in high yield, so you're not sacrificing too much on the yield side.
Yeah, that's great. Jan, as always, we appreciate your ideas. Thank you.
Well, it's great talking. Thanks, Tom.